While everyone's chasing Palantir at 300 times earnings, the smart money is quietly positioning in 4 other stocks that could have even better results in the years ahead. I'm talking about companies building the actual infrastructure backbone of AI, the picks and shovels plays that almost no one's talking about. I'm going to share these 4 stocks with you today. They're all very promising AI infrastructure stocks trading at a fraction of Palantir's overhyped valuation. By the way, I'm Steve Reitmeister. I spent over a decade as editor-in-chief of Zacks.com, and I'm currently a partner at WallStreetZen, where our quant team built the famous Zen Ratings system. I've been investing for over 40 years, and I've seen overcrowded names like Palantir fade away more times than I can count. Before we get into it, do me a favor and hit that like button down below. It lets me know I should record more videos like this in the future. All right, let's start with Palantir itself because you need to understand what makes it special before you can identify which stocks can actually rival or even surpass it in the future. And look, I get the Palantir obsession. I really do. What they built is generally impressive, right? Borderline amazing. They're the integration layer between messy enterprise data and actionable insights. Government agencies, Fortune 500 companies, they all have data scattered across dozens of systems. Palantir stitches it together and makes it actionable and useful. That's very valuable, and that's why they command premium share pricing. Unfortunately, history tells us that it's a dangerous place to be. Palantir needs near flawless execution to justify that 300 times multiple. Think of dot-com stocks in 1999 before reality came to town with the bursting of the bubble in 2000. As for today's 4 picks, they need just AI adoption to keep growing, which it clearly is. Okay. Each one addresses a specific growing problem. Each one is trading at reasonable valuations compared to Palantir. And each one is A-rated in our Zen Ratings system, meaning they scored in the top 5% of all stocks when we analyze them based upon growth, value, momentum, sentiment, and financial strength. So let's get into it. I'm going to walk through all 4 stocks, showing exactly what they do, why the AI infrastructure angle is compelling, and what the risks are. Then we'll talk about how to think about this systematically using the Zen Ratings framework. All right, let's get into it with a leading AI contractor to the government. I'm talking about our number 4 stock today, in Leidos with the symbol of LDOS. When the Pentagon, FBI, or Coast Guard needs AI, they can't just use public ChatGPT. Classified data, security clearances, strict compliance, they need a secure version that handles top secret information without sending data OpenAI's public servers. Enter Leidos. Leidos also just announced a partnership with OpenAI to deploy secure AI across the entire federal government. Now, LDOS ranks in the top 4% of stocks that we track right now based upon our quant rating system. It's also the 3rd highest rated stock in the popular information technology services industry. We also have a solid spread of B ratings for component grades across the board and an A for value. The strength in value comes shining through with their modest PE around 17, a far cry from Palantir's nosebleed 300. Okay, the strong sentiment score is in play because of the ample insider buying. That's management putting serious money where their mouth is. Now, here's why that matters. This is a $17 billion revenue company with a multi-billion-dollar contract pipeline. The Defense Threat Reduction Agency awarded them a $205 million contract specifically for AI-powered IT modernization and zero-trust cybersecurity. The U.S. Air Force awarded Leidos a task order worth up to $454.9 million to support its Cloud One enterprise cloud platform. These aren't one-and-done deals. Federal contracts are multi-year programs with options to extend even longer. Once you're in and delivering, you tend to stay in. More contracts process more data improves their AI models. That's their North Star 2030 strategy, AI at the core of everything. The risks, the growth grade is only a C, which is not bad, but at a $26 billion market cap, you're not getting smoking hot small cap growth rates. Government spending is cyclical. Administrations change and budgets can get cut. But here's the bottom line. If the federal government wants AI, they have to go through contractors like Leidos. And right now, Leidos is the only one with the OpenAI partnership in place. That's an appealing economic moat bolstering their business. By the way, if you want to catch more of these exciting investment opportunities, go ahead and hit subscribe and that notification bell down below. One stock I shared not so long ago in these videos has already gained 80% in just 2 months, meaning our YouTube subscribers get these alerts first, so make sure you are subscribed to get these future picks. Okay, next up we have Tenable with a symbol of TENB. At the tail end of January, Tenable launched their Tenable One AI exposure. This addresses one of the biggest problems in enterprise AI that almost no one's talking about. Your company is using AI everywhere right now. Sales using ChatGPT, engineers using GitHub, Copilot, marketing using Jasper. But what about your IT security team? They have nearly zero visibility into what is going on. They don't know what AI tools employees are using, what company data is being fed into these models, or where the security holes truly are. That's called shadow AI, and that problem exists everywhere. Here's the nightmare scenario. Your sales rep copies customer data into ChatGPT to generate a proposal. That data just left your secure environment and went to OpenAI servers. Does your security team even know it happened? Probably not. Tenable's new product continuously scans your entire company, cloud systems, SaaS applications, APIs, AI agents, everything, and creates a map showing exactly where AI is being used, what data it's touching, and where you're exposed. Then it shows you the plan of attack. Insights like if a hacker compromises this AI tool, they can access customer data through these specific connections. Now you can fix it before something bad happens. Tenable already has more than 44,000 customers globally, and here's the key thing about cybersecurity spending. It's non-discretionary. Companies don't cut security budget when times get tough. Once Tenable's platform is deployed, it's sticky. It stays in place. That's a beautiful economic moat. The market hasn't fully priced in this innovation just yet. Truly, the opportunity is massive when you consider that most every company, large and small, is using AI like crazy right now. None of them have good visibility into where it's being used by their employees, nor how to secure it. Tenable is now providing that answer. Our system currently puts Tenable in the top 5% of stocks based on the strength of its fundamentals. It also ranks as the number 5 stock out of 122 software infrastructure companies we track. The growth grade is an A, the top 2% of stocks, which is truly excellent. And that previously mentioned insider buying tips us off that the growth should continue. The risk, the momentum grade here is a D. The stock hasn't moved much recently despite the sparkling fundamentals. This gets solved when this hidden gem is no longer hidden. They also face stiff competition from the likes of Palo Alto, CrowdStrike, and Zscaler. And the big cloud providers are building native AI security features as well. But right now, Tenable is the first to market with a comprehensive AI exposure management tool, and an enterprise software being first matters a lot. Okay, moving on to stock number 3, we have Five9 with a symbol of FIVN. In mid-January, Five9 announced a massive partnership with Google Cloud. This has them integrating Google's Gemini AI directly into their contact center platform. Everyone thought AI was going to kill the contact center industry. Why do you need humans when ChatGPT can answer questions? The stock got crushed, down from over 200 in 2021 to just the high teens by 2023. Here's how Five9's Genius AI platform works now. A customer calls in. An AI agent handles the simple stuff, checking a balance, updating an address, tracking a shipment. That happens in 30 seconds. If the customer needs something more complex, the AI seamlessly transfers it to a human agent. And while that human is talking, the AI feeds them suggestions in real time. Stuff like, the customer seems frustrated. Last 3 interactions were about billing. Offer 10% discount to resolve. And here's the business model shift. Five9 used to charge per agent seat, $50 a month per person. Now they're moving to more a usage-based pricing. You pay based on how many AI interactions happen. More AI doesn't mean less Five9 revenue, it means more, and that's a real game changer. All of this has the company back on track. Specifically, their AI revenue is growing 40% year over year, and this has led them to implement a 150 million share buyback program. Their Google Cloud partnership takes this growth story to another level. That means access to Google's latest models, real-time updates, and enterprise-grade security. And they're listed on Google Cloud's marketplace now, which gives them distribution to Google's massive enterprise customer base. It's interesting to note the heavy institutional level support. Both Vanguard and BlackRock have positions worth more than $100 million. And Michael Kurtzman, a major investor, holds a nearly $150 million position. That's smart money backing this turnaround story. Like our previous pick, it ranks in the top 5% of stocks we track, giving it a Zen rating of A. Plus, it's the fourth highest rated pick out of the 122 software infrastructure companies, an impressive feat given how many attractive companies are in that group. The risk, the momentum grade is an F. The stock is down 75% from its peak. That's real technical damage that is keeping some investors away. There's competition from Microsoft Teams, Amazon Connect, and other cloud platforms, and there's execution risk with a new CEO taking over the helm. The rest, the component grades, there's a C here or there. The situation isn't as dire as it may seem. The stock actually ranks in the top 35% for financials, sentiment, and safety. Sure, there's room for improvement, but that's a solid showing in some key areas. This is what we call an asymmetric bet. If this turnaround continues to play out, and 5.9 caption even a fraction of the $300 billion market, this stock has massive, and I mean massive, upside potential. And if it doesn't pan out, the share price is already beaten down, thus risk-reward is firmly in your favor. Okay. Finally, we've come to our number one pick in Ibex with the symbol of Ibex. Ibex runs business process outsourcing for major companies, which is also known as BPO. They've got over 30,000 employees across 30-plus facilities worldwide. When you call your credit card company and reach someone overseas, that's probably Ibex. Here's a number that should make you stop and think. 175 million. That's how many customer interactions Ibex processes every single year. Now, traditional BPO was all about labor arbitrage. Hire workers offshore where labor is cheaper, save money, end of story. Everyone thought AI would replace all these call centers, like as in BPO is dead. Wrong. Ibex figured out the right model. AI doesn't replace human, it makes them superhuman, right? That makes the entire operation more profitable. Here's a bit more on Ibex's platform on how it works. A customer calls in. The AI listens in real time. It pulls up relevant account information. It suggests responses to the agent. If the customer is speaking Spanish and the agent speaks English, it translates in real time. They support 150 plus languages. After the call, the AI generates a summary. Then it coaches the agents. Here's what you did well. Here's what you could improve upon. And every one of those 175 million interactions, they're generating training data for the AI models, making them smarter over time. It learns what responses work. It learns what customers are actually asking for. It gets better at predicting what agents need before they even ask. That's a data moat around their business that compounds over time, meaning it makes it hard to switch to another vendor once you have Ibex in place. Ibex isn't just serving private companies anymore. You've got ample government agencies like the Coast Guard, VA, and Social Security Administration picking their name. Government customer service is notoriously terrible. Long wait times, outdated systems, and highly frustrated citizens. Ibex is saying we can cut your wait times in half and triple your capacity using AI. Ibex is positioned right at the intersection of AI and human work, which is exactly where the value is being created. As for the stock Zen rating, it is the strongest of all the picks today in the 99th percentile. In other words, the top 1% for their strength of their fundamentals, that's about as good as it gets. It also ranks as the number one information technology services company in our system. The value grade is also an A, which makes a lot of sense given the ultra-low PE ratio around 11 and a PEG ratio below 1.0. That's a steep discount to fair value. Buying is also strong. That's a healthy dose of conviction for management, which you always want to see in your shares. Now, there's the AI displacement paradox. If AI gets so good that it can handle more interactions without humans, does that reduce the agent count and revenue for Ibex over time? And that's potentially the true. There's also geographic concentration. Most operations are in offshore labor pools, which creates political and economic risk. There's serious competition from larger BPO providers like Concentrix and TTEC to consider. Their momentum score is the weakest link here, as shares have underperformed of late, but that isn't necessarily so bad if you're looking for underappreciated tickers with upside potential. Here's what Ibex has going for it. 175 million interactions flowing through an AI platform every year. That data advantage compounds over time because switching cost is high in this industry. And the government expansion provides a stable, high-margin revenue stream that traditional BPO players struggle to access. There you have it. 4 different AI infrastructure problems, 4 different solutions, and none of them with Palantir's risky nosebleed valuation. They just need AI adoption to keep growing, which it clearly is. How do we systematically analyze these stocks? That's where the Zen Ratings comes in. Our quant team built this system analyzing 115 different factors on every stock. We're looking at 26 different financial health metrics, things like return on assets, return on equity, cash flow stability, and more. Plus, we're analyzing 22 growth factors, not just earnings growth, but growth in revenue, cash flow, EBITDA, and profit margins. We're also examining 21 value measures to make sure we're not overpaying. Then we round things out with a review of momentum, sentiment, safety, and AI-specific factors. All 4 of today's picks are A-rated according to our overall 115-factor review, and each one has its own set of strengths and standout component grades. These aren't just good stories. They're backed by strong fundamentals. And by the way, I use the same system to identify 3 stocks which are most likely to double in 2026. So if you want to check them out, I'll put a link to our free report in the description, or you can scan the QR code. The stocks I've been talking about here, these are 1 billion to 27 billion market cap companies with plenty of room to run higher. Listen, the AI revolution is real. We all know that. But the ones that make the best long-term investments won't all be obvious. These companies are solving different problems: government deployment, enterprise security, customer experience. Do you see a clear winner on the stock list? Please leave a comment below and share your thoughts as to why. I personally can't say which one of these will be the biggest winner. I don't have a crystal ball, nor does anyone else. What I can tell you is they're all well positioned with strong fundamentals and clear growth catalysts. They're the picks and shovels plays for AI infrastructure, different layers of the technology stack. That gives you diversification. Speaking of diversification, I just made a video featuring 3 more under-the-radar picks with exciting upside potential. I think you'll like it, so please go check it out.